Finally got my drum roll. I'm sure that thank you very much, Kitchi. I've been waiting for that for a while. Let's just put the mic nearer to the mouthpiece. Mouthpiece nearer to the mic. Okay, morning all. Happy Wednesday. Hope you're making some pips in the Asian session. We're just opening here in London. And welcome to all new members. Good morning, on sale. Morning, Kitchi. Morning, Big Les. London calling. Morning, Steve. Quick look at the dollar index. Dollar index we're stabilizing around the 150 level, and we're sort of really looking for the direction of where to go from here. There definitely still continues to be risk off sentiment in the market, which is reflected, and we're going to look at these. It's reflected in the in gold prices, in the yen, in the VIX as well, which I don't have on my MT4 platform here, but all these are indicators that basically give you the indication that market is moving to risk off. And how long this can continue, I think, is the big question. The moment dollar index though is it's having it's pulling off from the Asian highs at the moment. We had a nice rally up from sorry, let me just pull up here the 1 hour. We had a bit of a rally up from the lows of yesterday. We're now back down at the 200 moving average on the 1 hour chart, sort of like in the middle of a range here now. Are we going to hit the 100 level, or are we going to go back up to the 101? So this is our level of support, which we've had drawn in for a while now. We're sort of like consolidating around here. We've got the Trump candle. If I could pull out to my 1 day, I've signaled in here. This is my Trump candle. This is the level of support. This is back now to the election day of 8th of November last year. Morning Sungate, morning Fly. And as you can see, we've tested it once, back when I was actually away in Thailand. But this is the level here that the market certainly will be looking at. So we're still a ways away from there at the moment. It's still around the 98, 70, 80 level. That's the level of big support in the index. Whether we can, if we push down towards the 100 level, and of course that level will be again eyed in the markets. But I want to keep an eye on this Trump candle, because there's also a Trump candle in the dollar yen, which is considerably lower than where we are at the moment. The Trump candle in dollar yen is let's have a look at it actually while we're on it. Trump candle in dollar yen is basically back here. Okay, this is the same date. This is the election. Dollar yen was around the 105.80 level, so that's 500 points lower than here at the moment, where the dollar index is only 150 points lower, which indicates really just a lot of yen strength in the in the markets. So and that's basically the risk-off trade that we're seeing at the moment. So this is really what's holding up the the dollar yen. Okay, let's look at dollar yen. Morning Shaby, morning Social Trader. Andrew, is that DX chart an indicator? No, DXY is a common DXY is the dollar index, and it's available on most broker platforms. Gold's looking gold. I'm going to come to this gold in a minute, Shaby. Gold is obviously to the upside. It's still long. We've been talking gold up to 1300. I'll talk about gold in a minute. Let's have a quick look at dollar yen. So this is the dollar yen on a 1 hour chart. Okay, now so we're having a minor pullback from the lows of 109.40 hit earlier. We're now back at 109.70. I've got a potential sell zone in here. I'm not totally convinced at this one because of the big move that we've had, and all the markets are now, when all the analysts start talking about the same thing, it's always a time for concern. I call it the Economist indicator. When something appears on the front page of the Economist, it's time to reverse normally. And all markets now are talking about this risk off at the moment. all the analysts are talking about the risk off, and the Japanese yen has had a real bit. So it's almost a little bit overdone. And technically, this is the level of I would be looking to continue this downtrend of the dollar yen. However, I think there's a potential because of the because of the ferocity of the move and the geopolitical news that's kicked in this week in Syria, Korea, Russia, what have you. It's happening on all sort of fronts at the moment. Carl Vincent's just been posted off the Korean Peninsula and the attacks in Syria. So it's all sort of like kicking off, and that's why it's been a big reaction. Now, these type of reactions tend to have corrections before they continue on. And I don't know if this, ordinarily, this is the 1 hour chart. I don't know, this typically in a normal market where there's nothing real catalyst going on, this would be a sell zone for me. Now, I put my sell zones in red and I put my buy zones in blue. I put this in a grey-ish because I'm not totally convinced about this pullback at the moment. I might want to see a pullback back up to the figure, back up to the 110. Remember the 110.10 level was the level that the markets were lying to the downside, which is signalled with this line here. Okay, 110.10. Now, one of the big ways that I use the Fibonacci tool is looking just at the fib, looking at the 50 level, which actually is not a fib level, as you may or well not know. Fib, it's not a fib level; it's a retracement level. That the markets look at. They look at it for extensions and for pullbacks. So if you look at the breakout from the 110.10 down to these lows, now the 50% pullback takes you into this minor pullback level. It's 109.75. Okay, so this is the level. So this is a level that ordinarily I would look to sell it. However, you can take this trade. It's quite easy where you're going to place your stops. If you're selling here, you'll place your stops above the 110.10 level for continuation of the downtrend. For me, I'm going to wait for more of a significant pullback on here. So I'm going to wait for a pullback up into this area here, which is basically the 110 level. So I think you could have a snapback just because of the overreaction of the move to the downside. So still playing dollar yen to the downside, but not. I like to sell into pullbacks, and I just want to see a bit more of a pullback. But if you are more aggressive, there's no harm in taking that trade today. And it's an obvious place where you place your stops, and that's above the 110 even figure. Yeah, RS. RS. I always respect what you say. You've got big insights into what the banks are doing, so I respect that. It's basically saying be careful. There's fast money accounts who cracked it through 109.50 in Asia, left tight stops in good size through. Yeah, exactly. So I think you're right there. That's exactly what I'm saying. There's money that's basically pushed it through these levels, and what he's talking about is there's fast money. There's a lot of people getting short this with this momentum candle here as we broke through the 109.70. Well, you're saying cracked it through 109.50, yeah, but I think they've cracked it through. Well, okay, cracked it through 109.50 means that a lot of money, a lot of traders put the money through. Short trades through 109.50, and they got the stops above 109.75. So I'm totally agreeing with that RS on that. I didn't see your comment beforehand, but I think this type of momentum move, you could see stops above here now, which will take us back up to the 110.10 and even 110.10, possibly even up to the 110.25 level, 110.25 level, which is this level of old support, potential resistance. So I think you're right. I think the ferocity of this move is just something that I want to sort of keep away from at the moment, and RS has articulated it there very well. I'm feeling aggressive. Kitchy's feeling aggressive. Good for you, man. So you're taking. You don't really trade dollar yen, I don't think, do you? I think you trade the euro dollar more than anything. But that's my thought on the on dollar yen. So thanks for that, RS. Morning, Max Pro. Okay, before we move on to the FX pairs, let's have a quick look at gold. So gold, gold markets tend to respect round numbers, 50s, 25s, 75s, 100s. We're sort of stalling around the 75 level. Bias with risk off clearly is to the upside in gold. Gold continues to grind higher. It didn't have any real problems pushing through the 200 moving average, 200-day moving average of 1257, 1260 area, up to the 1275 area. It's a little bit precarious at these levels. I certainly wouldn't want to be buying at this particular level. I'm more inclined to want to get to see a pullback in here. I like to see pullbacks of certainly of the 50%. So if you look at this consolidation area, the 200 moving average, a 50% pullback area would get me into gold markets around the 1265 level. So we're still a bit about $8 low from here. More of a conservative entry would be 1263. Now, significance for me in this, the next level clearly that the market is going to be looking at is the 1300 level. 1300 level, didn't really. This is the 1300 level here. These levels 1300, 1200, they tend to bounce off resistance support for a while before they break through. 1300 level, only tested it once before it snapped up through, and we've been up through it since June of last year, before we broke through, of course, on the downside. So it spent a long time up. It only tested it once, really. This is the daily chart, and we snapped it through. Now, the 13 level on the downside, markets were talking about big resistance at 1300. It tested it once before it just had a one-day move and didn't touch the sides on the way down. So it broke through 1300 on this particular day, and straight back down, 50 bucks or so, 40, 50 bucks. So 1300 level, if we get up to 1300 level, whether it's going to test it or whether we just literally just to motor on through, as far as I'm concerned, to get up to 1300, there's really got to be some more material global geopolitical concerns to get us up there. And if that does happen, then there could be some serious stuff out there. In which case 1300 might not even not even touch the sides through that level. It might just push through back up to the 1350 level. So although 1300 level is a level that markets technicals will look at, I don't know, if we get up there, it's going to be possibly just a pop through. So I'm definitely mindful of that. Just in terms of geopolitical, I mean, China talking it down last night. They're saying that we need dialogue with North Korea, with Syria, and what have you, political concerns. Russia, we've got Russian foreign minister, US foreign minister over there at the moment, good friends of Putin. I've got a tendency to feel that this won't get out of hand. And I mean, hopefully for everyone, no one likes to see wars kick off. But I mean, you just want to. I've got a feeling that all the tension that we're seeing at the moment, this build-up in tension over the last week or so, is going to subside, or secede, I should say. And then you might obviously then see some realignment of the dollar yen and indeed of gold prices. But at the moment, this is where we are at the moment. You've got to go with the way it is going. I don't trade what I think is going to happen. I have to trade what I see is going to happen. At the moment, the risk is off, and we are seeing gold prices push up and the yen pushing low. So that's where we are at the moment. Oil prices at $53.60. Oil prices are. Let's have a look here. Just going to pull up. Let's just pull up WTI here. Right, this is WTI. Sorry about that, my mouse is a bit sticky. Running out of battery. So WTI, 1 month chart. This is the 1 month chart. This is the 3 month chart. So we've not been up at these levels in WTI since basically so we haven't been up here since basically the end of February. Let's put out to the weekly. Okay, so we've touched it a few times at the January, February, but before then we've not been back up here since July of 2015. So this is quite a key level now in WTI and oil prices. We've obviously got the OPEC, non-OPEC meetings that's in May, end of May, middle of May. Whether crude now can push up higher. In the meantime, obviously it's been a good supporter of Canadian dollar, but at the moment we are seeing certainly potential resistance in the WTI. So anyone that's getting long Canadian dollar on the back of oil prices, be mindful of. I think this is it's a key level that the markets are looking at in WTI. Of course, we've got inventories out later, which could see there's Q80 minister talking yesterday about stockpiles increasing, so you could possibly see the WTI bounce off these levels, which obviously will affect the Canadian dollar. We'll talk about the Canadian dollar later, because obviously there's quite a lot going on in the Canadian dollar in terms of policy meetings. We'll talk about that in a moment. Let's have a quick look at the Forex pairs now. For those that trade the euro. So the euro, this is a bit of a no. It's a bit of a difficult one for me to trade at the moment. I haven't traded the euro for over a week now. This is a level of consolidation in the euro. We're still in a downtrend. The euro is one of the weaker currencies in the basket of currencies. We are in a downtrend. We had let's put out to the daily. The hourly. Okay, so this is the move yesterday. We had a move yesterday to the upside into my level of resistance. Pierced it once and then came straight back off. We're now moving back into it. Just narrow it down, make it a bit easier to see. So I'm not sure my ATR window is so big. So if we get back into this level of a sell zone, it's a 106. It's not far off it now. 106 basically up to 106.30, 106.20 to 30 area is a level of it's a sell zone now. This is quite an easy stop to place if you were to go short in here. You'd have a short above this consolidation area. It's it's like a 70 pip stop, 60-70 pip stop. Of course, you can drill it down to shorter time frames to take less narrow stops. You could place like a 20 pip stop, 30 pip stop, which is it's really narrowing on the ATR. Look at the ATR on the 15-minute chart. 3 pips at the moment, 4 pips on the 15-minute chart. That's what the euro is doing at the moment. So it really is consolidating. But this is the sell zone at the moment. I'm not going to be selling at this level until we get into the 106.30 level, which is still about this is a shorter time frame, 30 pips, 106.30, which is still 10-15 pips higher than where we are at the moment. That is the sell zone. But let's have a look at the ATR on the hourly. This is the hourly. This is the hourly ATR. That's how much the pair tends to range in an hour. 7 pips, really, and it's up. It's up as high as 18-20 up here. We get up to 17-18. So it really is a really consolidating market here at the moment. But that's the view on the euro dollar. Basically, not getting involved until we get up into this consolidation area. And not expecting any fireworks. So this is an aggressive entry. Really, if you want to be more conservative, getting it short around the 106.40 to 50 area might even be a better trade for you. Then you get a better risk reward in terms of where you place your stops, which will be above the consolidation area, back up here to about 107 and above. So we're selling from the 106.30 to 106.70 area is a reasonable sell zone. So I've graded out as consolidation area. This is where I think it's best to sell this stuff at the moment, with the stops above this swing high, recent swing high. Okay, just having a quick look at the chat. Right, okay, let's continue with the majors while we're on the majors. Okay, so we're now at the 125 level. You know, bias for me continues to be to the upside in pound dollar, but seeing how we reacted above 125 last time out, you know, didn't hold it for much more than a day and a half before we came back down and traded happily below it. So for me, I want to see this market basically push higher above the 125 area before I would consider getting long. So I like to see us, we're going to stall here possibly at 125. If we break higher, then look for it to retest and then continue to the upside. So basically the bias continues to the upside, but not into this roadblock of 125, which could hold it. If we break through, then I'm happy to buy pullbacks into the 125 area. But at the moment, I'm going to sit back on my hands, of course, unless we have a significant pullback into this buy zone, which is the one around the 124.30 area, which is the 50% pullback from this move from the lows of Friday to where we are now. So I want to see a significant pullback into this area, 50% pullback. Also structure to the left of the chart. It's been respected here numerous times on 4th and 5th of April. Marginally tested it back here on the end of March. So this is the level basically that I would be comfortable getting long. Not getting long at these levels, but if we break through, then certainly, and we maintain above 125, then I'll be using that as my benchmark of support for continuation to the upside, possibly looking for the 127 level. Excuse me, I'm going to cancel that out. So up to 127 level being the next support, and if we break 127 longer term, then of course 129.30 is on the cards, but that's a longer term view. It's not going to happen today, I wouldn't have thought. Right, let's just bound back to the faithful strength meter. Still seeing continued weakness in the Australian currency. This is the 4 hour. The direction of the line is heading up, so that will be evidential in the 1 hour. You can see here moving up on the 1 hour, so it's moving from a period of weakness. We had numbers out in China overnight, CPI numbers, which basically were not as the market, well, they basically missed expectations. So not wonderful news out of China in terms of CPI. The Aussie dollar could have really had a more negative effect than it did, but we've had such a sell-off in Aussie over the last few trading sessions and so forth, with commodity prices lower, particularly iron ore, Aussie being the main exporter, copper prices all being lower. Aussie's under pressure. So we've seen some sell-off in the Aussie, but now we're seeing a bit of a correction. However, I'm not convinced. Not convinced by the Aussie rally at the moment. Of course, we've got to keep an eye on the data. Aussie data out overnight, coming up. Coming up overnight, we've got unemployment coming out in quite a few hours' time. What is it? 15 hours' time or so, something like that. So I'm not totally convinced with the Aussie strength. Still playing this with a bias to the downside. This is the Aussie dollar. I've got my sell zone in here. Sell zone of very tight ranges again in here. Sell zone basically a 75 even handle, which we're at now. So we'll see if we can hold here. It's tested it a couple of times already today and hasn't liked it. We might move back into this sell zone at the moment. I think a conservative, an aggressive entry would be selling between 75 and 75.10. More of a conservative entry is back at the 75.25 level. Okay, so I'd like to tell you what I'm going to do here. Is that just this level here is the 50% pullback area. I can see it with the naked eye, but you can put on a fib tool. So this level here would be the preferred level of entry with a possible snapback in Aussie, because it's getting some strength at the moment, and basically on the back of nothing, on the back of what should be weaker numbers for Aussie, but it's having a bit of a momentum move to the upside, bit of short covering possibly ahead of the unemployment numbers coming out. 75.25 area, I prefer to get short if we pierce through the 75 handle. 75.25 would be my next logical level of shorting, and a stop would be. I'll change the batteries in the mouse. So you're going to have a 40 pip, 50 pip stop in here above this swing high from Friday for continuation of the Aussie weakness against the US dollar. So that's what I'm looking at in the Aussie. While we're on the Aussie, let's look at the Aussie. I'll look at the Aussie CAD. Aussie CAD is there. Here we go. So this is the Aussie CAD. We are in a consolidation phase phase at the moment. Bias continues to be the downside for me. I'm still liking the this is an area of selling for me. 100 spot 24. We are still just trading below parity. So we'll see where we come with this consolidation phase. We could end up, certainly coming back into it and hanging around here for a while before we get some clear direction from numbers and of course Canada. So there's quite a lot going on in these two pairs over the next 24 hours. In particular, we've got Canada, Bank of Canada, the Canada Bank meeting in terms of rate decisions. And we've got, that's at 3 o'clock, press conf. This is at 3 o'clock, this is BST time, which is London time. The press conference is at 4:15, and the governor is speaking at 9:15. So there's quite a lot going on in CAD today in terms of high impact news, and of course US Aussie employment numbers as well. So there's a lot going on in these two pairs. So that's why I think we're in this consolidation phase in terms of this currency, looking for direction. Do we continue on the downtrend, or do we have a snap back into this area of 101.50? Let's have a pull out to the daily chart. So this level 101.50, 150 points a lot higher. This is where the market was happy to consolidate after the uptrend, and from back here as well. So we're seeing whether we can continue down to the downside. Of course, if we continue to the downside, next level on the downside to look at 98.50, and then 97.80 area, and then of course much lower down 96.50. So we'll see if this continues. Impact news to affect this currency pair. Right, let's have a look at the Euro Oz. Okay, euro, I mean, just putting out to the strength meter, you'll see the euro is. Let's have a look at the euro on the meter here. Euro and Oz are basically at the bottom here on the 4 hour. What's happening at this moment in time? I drill down to the 1 hour to see what's happening at the moment. Euro and Oz are both basically moving up together really from the lows. So basically sort of like jiving together at the moment. I know this is one of Jason's favourite pairs. I've got a level of buy zone here, 41.50. $41.50 is a. You're going to take this now. You can have a 20. You can have a nice tight stop in here, below the. I don't really look at moving averages on a 15-minute chart or the 200 moving average, but you can have a 30 pip stop loss by buying Euro Oz at these levels. It's coming into a 50% pullback from the move from the lows here into a level of resistance to the left, 50% pullback. It's a reasonable entry in here. Risk reward ratio minimum one to one. Although you never know your risk reward before you trade. Well, you can know your risk reward expectations before you trade when you place your stop losses in and your take profit targets. If you can realistically get a take profit, I'm just reading the chart here. So it says risk reward ratio minimum 1 to 1. Although you never know your risk reward before you trade. Well, the risk, you define your risk before you enter the trade, i.e. where you're going to get out of the trade if it's wrong, and then you look for your take profit target to see it's not into a major level of where it's attainable, where it's not into a massive roadblock. If you can get more than 1 to 1, then the trade's on. In my trading plan anyway, never trade less than 1 to 1. So yeah, risk reward on this. 30 pip stop. It works. I mean, this is where I would analyse this just on the back of that. Getting in here. You can have a 30 pip stop loss to retest the highs. Of 142.20. It gives a 60 pip take profit target. That's a 2 to 1. I mean, that's both of these are attainable. We're into this level of support. Are we going to have a trend continuation? The overall trend is up. We've had consolidation. We've broken through the consolidation period. We're now back into the consolidation. It's a 50% pullback into this move, and we've also got some structure to the left. It's a good level to get in, and it gives you a good risk reward ratio. In fact, I talked myself into that trade. I mean, I can't do much wrong on that. So we'll have a little trade in the euros now. So I'm just going to take a 30 pip stop on that. That is slow again. This is really slow at the moment. I've got to check this out. I don't know if it's my PC or the broker that I'm using. Right. Okay, so that's the Euro Oz. Quite happy with that for retest. I'll look at that take profit target as we get closer. Never move my stops, but sometimes we'll happily move a take profit target if there's any. Depends how we get up there. If we grind hard, if we pop up through. But it's a level certainly that gives me a 2 to 1, so there's no harm in taking it there. Yeah, I mean, if we get up to if we break the 42 handle, next stop 42.50, so you might even get more than 2 to 1 out of it. But certainly on the risk reward, I quite like that. Right, Euro Yen. Euro yen, I have a notification in here from yesterday. We haven't hit there yet for a 116.75 as a potential continuation of selling euro yen, selling euro, buying yen. Okay, this is a level of support. If I this blue line was a level of support from, if I drew that to the 1 day, you'll see here it's a level of support from the left of the chart back from August. Okay, so the two levels of previous resistance. Okay, this is the base of the takeoff to the upside, and of course back down into that level, and the market has respected that level. So looking left in the chart, clearly seeing here it's a structural level of support in the euro yen. So can't sell euro yen here, it's just too close into the structure. However, if this does break to the downside, if it does break to the downside, then you're looking back down to the 115 level. Right, I just ended up by looking at the Aussie New Zealand. I know quite a few like to trade that. Aussie New Zealand, we're now into a consolidation phase again. Downtrend is the bias. If you can't break yesterday's highs, then that has my bias again to the downside as well. Yesterday's highs being in here. Okay, 108.17. Looking left here, it's a support as well at these levels. So we're into a level of support here at the moment. So this is a sell zone for me, 108.08 to 108.17 for continuation of the downtrend. Okay, I'm short Aussie now, as you know. But continuation of this one still is to the downside. Let's look at the 1 day. Support on the downside 107.50, so target 107.50, 50 points from we're here at the moment, and the stop would be 50%, 50 point profit target, 25, 30 pips stop loss, 2-to-1 risk reward. So that's what that's how I would analyse that. Look at risk, look at potential profit targets. More than 1-to-1, I would take it. I can't think why it would echo today. Everything is switched off. Anyway, we've come to the end of the stream now anyway, so that's good. Sounds like I'm doing horse racing, good. Okay guys, well that's basically my thoughts for the day. Now we've got UK numbers out in 45 minutes, big numbers out in the UK. We've got the Bank of England, Carney speaking in 15 minutes time. So I'll get off the wires so you can listen to him. So he might have some, I think there's a bit of odd timing speaking just before some big numbers that are coming out. Whether he's speaking over the numbers, he clearly would know the numbers. Do you trade, Laz Laser says, do I trade pound or US? Do I trade in pound or US? This is my streaming account, is in US dollars. My business account, which I've had for many years, is in British pounds because I'm British pounds, and it's not. It's British pounds, but this is a US dollar account I've set up just for the streaming a few months ago. The numbers coming out. We've got average earnings at 9:30, so the markets will be certainly looking at that. We've got Trump speaking at 11, which is about 2 hours time, which is 6 in the morning for him. I presume he's in Washington. But he's speaking at 11, which is 2 hours time from now. So Trump's speaking. Then, of course, it all kicks off in this afternoon with the Bank of Canada in terms of rate decisions and press conferences to follow. The US, the numbers coming out of Canada over the last few couple of months or so have been good numbers. Bullish economy, things to be certainly moving in the right direction. The bias is for a move to the upside in Canadian rates. However, it's very unlikely, I think, that they'll be doing anything today. The finance minister was cited as saying a few weeks back that moving rates too early could cause, could risk recession. So I think they're likely to not want to tempt fate on that front. So it's unlikely that the Canada would move anything. But the statement that follows, which is an hour and a half or so, an hour and 15 minutes after the rate decision, is important to see their views on where they think the forward guidance is likely to take us. So at the moment, just look as we speak, yen is coming off its perch as we're seeing some possibly move back into a bit of risk, having had all the analysts talking about risk off to a couple of days. So we're mindful that there could be a correction here, assuming now that the dollar yen is blipping up through. So as we were talking, mindful of possible stops around the 109.75 level in dollar yen, which could take us back up to 110. Okay, so there you are with me. Just one trade for me, Euro Oz. But only off US dollar accounts, LMS. Yeah, okay, I'll have to check that. I'll have to check that with LMFX, whether they only offer dollar accounts. Might be the case. Colin, what moving averages do you use? I tell you now, I don't trade off, Colin. I don't trade off moving averages. I'm mindful of the 200-day moving average on anything that I look at because I know the banks are looking at the 200 moving day average. So they definitely look at that in terms of their overall bias and also potential reversal levels. The levels I have on my charts is purely for visualization. I like to trade moving averages that are spaced out like this, that are fanned out. I don't like to trade moving averages that are like this here or like this clearly. I like to see this type of setup. I'm a trend continuation trader normally. So normally when they bunch together like this and then they start fanning out, this is the type of environment I like to get in. I don't trade off them. The moving averages I use, I double up on everything, so I have 10, 20 and 40. That doesn't mean that's the only ones you should use. I do personally, I've traded on the floor for many years and we didn't have the privilege of using these. I only started really using these 10 years ago when I sort of came onto the screens. But I've always basically used double up. So if you use a 5, 10 and 20, or if you want to use a slower moving averages, you can use 20, 40, 80. That's just basically something that I've always done. I mean, I don't remember reading it anywhere years ago, but it's something I've always done. So on my screens here that you'll see, if you're following me on the streams, are 10, 20 and 40. 10, 20, 40, and I use the EMAs, and the 200 moving averages generally on my chart. Andrew, you never know what you're going to get, and so I don't know what that's referring to. Sounds like Forrest Gump to me, but not quite sure. No worries, Colin. Thanks for dropping by. Let's have a quick look at the. I'll jump off before Carney gets on. Not only because I want to listen to him. Let's have a look at some trade ideas before I wrap up the morning stream. Morning opening. Let's have a look at this. Whoa. Aussie weakness. Okay. Yep, this is good. I like this. This has got lots going on here. Don't understand it, but I get Aussie weakness. So, yep, lots going on there. Yeah, okay. This points to Aussie weakness, so I like that one. Aussie Swiss. Let's have a look at Kitchi. What have you been talking about today, Kitchi? I won't be a seller until I see this level broken. So this is the Aussie dollar. Until you see 74.91 broken. We're not far off it now. But yeah, this is a level of conservative entry. 74. Well, this is a high time frame chart clearly. You've got entries at 76.50, 76.50. Yeah, that's a longer term chart. 75 in Aussie dollar is a key level. Clearly, 75.20 is a good sell level. You're looking to sell a breakout to the downside, 74.91. Yeah. Okay. Let's have a look at yes. For our time frame, Euro New Zealand entry 52.72. Long entry 52.72 with a 52.25, so about a 50 pip stop. 54. Yeah, nice risk reward on that. Euro New Zealand, not totally sure of the reasoning behind the entry on this chart. I'm not really familiar with how you trade. I'm not really familiar with what these things are showing me either, to be honest. A couple of white candles, potential bullish trend to the upside, I guess, into support. Yeah, okay, see it. What I do see is your risk reward ratios, which I like. And TDAR 200, let's have a look at what you've got to say. You've got a MACD on there, other extra things. I presume this is a RSI or okay, so entry short 110.12. Take profit, sorry, stop loss of 11.50, which is 170 points, and a take profit of 102. Yeah, this is what Nick says. It's a big 102 is a hell of a target. Yeah, I get that. It's a big target. Yeah, it's a hell of a target, but I mean, I get the direction of it. I mean, I think you might find 107. I think you might find that, the 107 or the Trump candle at 105 be a test before that. But see the entry, 110, bit of a tight stop for that, to be honest, for that target. But yeah, good luck with it. Nothing wrong with having that. Go and sit on the beach for a few months. Damon, what have you got here, Damon? Start, the CD leg and the fib. A, B, C, D. So is it A to B, B to C, C to D. C to D, fib level to the downside. Yep. No problems with that one, like that. So you've got the A to B, B to C, C to D, for a rollover to the downside at a fib level into a level of support, or old support, now resistance, and coming to an overbought in the RSI. So yep, nice one, Damien, like that one. 9 hours ago, so it must be, let's have a look here, 9 hours ago. Shorting euro dollar 106.04. Continuation, yeah, coming into this level of previous support, now resistance for continuation of the down leg. Nice one. So keep the trade ideas coming, guys. It was a nice ABCD, yeah, like that. Okay, I'll leave that there. For those that don't know, here are the schedules for the upcoming streams. I know most of you do familiarise with this, but we've got new people coming into the room all the time, so I'll just recap these now and again. We've got, if you look here, you can drop down this menu here into today's stream. So you've got me here, it says live here now. Tony's up at 10 o'clock, which is an hour from now. And once I come offline, you'll see a countdown here of how long it is to the next stream. So when I log off in a minute, you'll see a countdown to the next one. But these time zones are relevant to your own particular time zone, depending where your IP is, where you're logged in. And if you want an email reminder, just click Remind Me here with the button at the bottom, and that will send you a 15-minute reminder prior to us coming on. So do make use of that, just in case you're away from your desk. And of course, if you've got your smartphone, then you get your emails on your smartphone. You think, oh yeah, okay, and you can get on and listen to us. Right, folks, I'll leave you there now. Let's say Carney speaking, Bank of England Governor speaking in 5 minutes' time, and then we've got all important numbers out at 9:30, and then you've got Trump at 11 o'clock, and then you've got Bank of Canada at 3 o'clock. So keep an eye on the data today if you're trading those pairs. Trade safe. I'll be, as always, hanging out in the chat room. So keep the comments coming, keep the trade ideas coming, and let's make this room as interactive as we can. I'll end up with Jenny's comment. Andrew, I think you and Jason need to change the picture. Looks like Tony Pick, he's smiling. Well, that is an English smile, Jenny. We don't, we're English. We don't, show too much teeth when we smile. So that's an English smile. So it is what it is. Okay, guys, I'll speak to you later. Trade safe, speak soon.